Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, the 23rd of February, 2007, and the market's closed for the week. Let's go ahead and see what we got here. The S&P 500, the spiders, closed down 50 cents. Yesterday I said that we needed to be a little bit cautious because we saw this breakout yesterday that seemed to have failed, and that it closed below that 5-day moving average. Now that 5-day moving average is in fact declining, so we've got to really be on the defensive here. This is the failed breakout I was talking about. And a lot of times these little failed breakouts do lead to something more significant, especially when you see a important level of support broken. Now the level of support that I thought was important was really at about 145 and a quarter to 145.30. The market did close just above that level, but you know, I'd say now it's the 145 level that really takes on significance. We have what looks to me like 3 lower highs. We have this low and a lower low, so breaking the 145 would just add to that. We can throw on some Fibonacci and see where it might have the potential to go, where other people might be looking to buy. So, you know, looking like the 144.40-ish area, right around in there, coming down, closing this gap, might be a reasonable target. Yesterday I had mentioned that maybe 144.50, so which was the level where this gap came from. So I think 144.50 remains a reasonable place that we might expect this market to pull back to over the maybe sometime next week. But and that's again based off this daily time, or I'm sorry, the half-hour time frame too, where we see that bigger level of support in here, and then that 144.50 right there. So overall, though, looking at the daily time frame, the uptrend is still intact. There is nothing here that indicates this market is topping out. So don't bother sending me an email with all your oscillators and indicators and saying how wrong I could be, that the evidence is so clear in front of us, because I get sick of deleting those emails. I've been doing it for 3 or 4 months, and when the market turns, we'll know. Until then, it's just a guessing game. The weekly time frame, we saw nothing really happening here. That's a spinning doji or hammer top, whatever. I'm kidding around about those candle formations because I really don't put much value in reading them. So let's just take a look at the Nasdaq 100 instead. The Nasdaq on a weekly basis, closing at 45.26, wasn't good enough, or was it? 45.31. So it wasn't good enough for a weekly closing high. It was 5 cents off the first week of January. So we did see higher highs in the daily, and we saw a close at 45.26. So, well, 45.28 was the daily closing high too. So we're up against an area where we've seen a little bit of resistance before. However, we've got a rising 10, 20, and 50-day moving average. I say this market is innocent till proven guilty. People who are looking for a double top don't know what a double top is, just like this wasn't a double top over here. We only know a double top after the fact, when it breaks support way down here. Then you can look back, and then you take the height of the pattern and subtract it from the breakdown point, and that will give us a target there if we had a double top, and we could only recognize it right here. So that's not what a double top is, just kind of a little pet peeve of mine, like candles. Anyways, the trend in here remains bullish on this 30-minute time frame. You can see we've got a nice rising 5-day moving average. So as long as that's still rising and the market's above it, I think we give the benefit of the doubt in the short term to the buyers. And looking at the 10-minute time frame, we can still see that 5-day moving average here as well. We were looking at the support level being about 44.80 to 45 bucks a share, and it was just a quiet day for the Qs. They lost 16 cents, but you can't say that anything has changed here. The uptrend's intact. We've got these moving averages crisscrossing a little bit, which tells us there's a little bit of indecision in the short term, but because the primary trend is so bullish that I think we have to remain looking at this market as innocent till proven guilty. The buyers are in control. There's no evidence that they're losing control. The mid caps here, once again, they held on to these gains great. Another just fantastic week for the mid caps on this weekly time frame after that breakout 4 weeks ago. It's just been steady up from 150 to 158. So this group, this area of the market continues to be the strongest area. Looking at the 30-minute time frame, we're starting to see maybe a little bit of a range-bound trading area setting up in here. And as I indicated yesterday, just because we have sideways action doesn't mean it's going to break down. It might just be a correction through time that leads to another break higher like we saw over in here last week. So we've still got that rising 5-day moving average. The important level of support is probably down here near about 157.50 or so. Breaking below that might turn this 5-day moving average, and then maybe we get a pullback. But for now, there isn't that evidence yet. We just have to be aware that the market has expended a bit of energy, getting from 153 close to 159, and some kind of consolidation, whether it's through time or price, is definitely warranted here, and would actually be healthy for the market as it puts in a better position for new buys. The semiconductors did add to their gains, came up very close to this prior high right in here that we saw late last year or October of last year. Looking at the weekly time frame, I'd drawn this trend line in yesterday. That's good to see it above there. It's more important to see it above this level here, above the, let's just call it 36. But great week for the semiconductors. I mean, there was some real strength in here. It broke out of this, this stupid range that it's been in for a while. We saw some big volume come in. It got up to the high end of that range. Ideally, I'd love to see it pull back down to maybe even just under 35, build some momentum, and then push up through that $36 level if we can get some new shorts in here. And I think those short sellers who've been involved in the semiconductor group could be in for a lot of hurt coming up if we get that scenario to unfold. So we'll continue to monitor these semiconductors closely because the action is starting to look a lot more bullish in there. And like I said, there could be trouble for the short sellers. Today, I didn't have any new stocks for you last night. We had 2 open positions. One was this dollar financial DLLR. Yesterday we got involved at 29.50. And I'd suggested raising your stop to 29.20. Unfortunately, that couldn't have helped us because the stock gapped down. I didn't bother to check the news, but you should have been stopped out on the open at 28.35. It hurts, it sucks when it happens, but when these stocks gap down, you got to get rid of them. It's telling you that there's a big institution wanting to get rid of a lot of shares. Don't second guess that. Rip the Band-Aid. Take all the little hairs. It's going to hurt, but you're better off just putting it behind you. So a $1.35 loss in there. Yesterday I said that the way it failed twice and with the volume in there kind of didn't have me. I didn't really like the action. I didn't know this was going to happen. Hopefully you didn't get stuck in it, but if you did, hopefully you had SiRF as well, because SiRF is a good one and it more than made up for that piece of garbage dollar. We got involved here yesterday at 31.15. And our stop was at 31.08. That didn't get taken out, obviously, in here today. The stock ran up past our target. And if you're still, so you should have taken at least half the position off, but a fantastic rally in here. I got a couple emails from people that said they did participate, so that's great to hear. If you're still in it, put your stop at about 32.50. And like I said, we were in it at about 31.15. So that should more than make up for that disaster in DLLR. Have a great weekend, and I'll be back with another video at some point.